All right, let's go. Jay Dover, Dover Financial Services.
Thank you.
The one thing I noticed was when I saw your email, it's like j.dover at LFG.
I'm working on that. So,
I love it.
oh yeah.
LFG, let's fucking go.
Yeah, it's one of those things that you take for granted. Like when something's been so accustomed for so long,
Yeah.
and then someone throws like, "Oh, did you realize that it stands for that?" And you're thinking, "I should have."
Yeah.
But I've been so indoctrinated with Lincoln Financial Group all this
Ah,
time that I
I
never
like let's
was
fucking go.
lent the luxury to think about it like that. There's a name. Wow, this is going to get inappropriate real fast. So
They usually do.
we'll just edit it out. But
Yeah.
there's a town to the north of where I grew up called Cumming,
Uh-huh.
spelled exactly the way that you think it does.
Yeah.
And I don't think it was until after I was 30 that I actually realized there's a town called Cumming
Yeah.
that is right next to where I live. And I've never really even thought about it.
Well, see, Jay Dover doesn't have a dirty mind.
Maybe that's the moral. And
But
that
yeah,
little
when
excerpt.
people are like, hey, LFG, what's it stand for? My response would be, you want to make money, right? They'd be like, well, that's why I'm here. I'd say, well, let's fucking go.
Yeah, maybe I shouldn't change it because I just put in a domain request to have it, Dover Financial.
Can we get a sneak peek on it, or are we going to keep it under wraps for now?
Of which?
The new domain, the new potential domain.
Well, it's not a big secret.
Okay.
It's just going to be J at doverfinancial.com, but I'm really completely second guessing that now.
Gotcha. Well, I mean, if it's not broke, why fix it, right?
Or just do both.
So, Jay Dover, obviously financial services, but what we were talking about right before the podcast started was the big talk, and I feel like it's been a big talk for almost a decade now: fee-based versus commission-based, right?
Yep.
So, can you kind of explain both of the models and why that means anything to a potential client?
Sure. I mean, if you had to, we'll start at sort of the summation of it and we'll work backwards. But if you had to put it in one term, I'd say conflict of interest.
Okay.
And the reason for that, in terms of like why things have shifted to this fee-based model, is for years in the financial services industry, you had a breed of salesperson that would go and sell products. They generally carried very high commissions, and while a consumer is not directly paying for that, they are certainly indirectly paying for it in the quality of the product that they're getting. And it can certainly lead, or did lead, a lot of advisors to push certain products that were not necessarily in someone's best interest because they carried this higher commission that a consumer would otherwise not know about.
Mm-hmm.
Now, one could argue that if someone's receiving a commission, that's not coming directly out of their pocket, and they are correct to some extent. If it's an annuity product, if it's a life insurance product, the consumer's not directly paying for that, unlike, say, a real estate transaction.
Mm-hmm.
It's the company is, but it does provide a huge conflict of interest where if two different products that are essentially the same, or maybe not that different, if one's paying an 8% commission and the other's paying a 4% commission, more often than not, the advisor's going to, push that product that's paying 8%.
Right.
If they don't have anything else that they can lean on to make a living. So it's a very flawed model. It's a model that was in place for, I'd say, most of time,
Mm-hmm.
as far as the financial industry goes. And only recently has there been a lot of aggressive shifting, whether through regulation, sort of this ethical referendum of just simply doing what is best for people.
Right.
It's like this huge, mind-blowing concept. Do what is best for your client, not yourself. And so what is so simple on the one hand has very quickly become the norm, where there's a lot more transparency. There is a lot more, I think, of an ethical workforce that's out there, and people know what they're paying for. People know that, yes, I'm I'm paying for this fee. It's clear, it's transparent. I'm paying for it. There's no free lunch, but
Right.
it's also the idea of knowing what you're paying for and knowing that you're getting the best advice for that fee.
Do you, and maybe you don't know, but what would you say as far as a percentage is based on companies that are that are operating on fee base versus, commission base?
When you say percentage, what do you mean exactly?
So if I were to connect with 100 financial advising firms,
Uh-huh.
what is the probability in terms of percentages that they are commission based?
Very low.
50%? Okay.
I would say if we're talking pure commission based, I'd say less than 10%
Okay.
at this point.
So less than 10% of the financial advisors that you connect with, if you're a just regular consumer looking to find a financial advisor, you would say the chances are only 10% of them are going to be commission based.
10% or less if we are talking about an advisor that deals with securities or investments.
Okay.
Now, there's a huge muddy middle ground. So for those advisors that are part commission, part fee, if there's any sort of hybrid, we don't have to dig into all the different shades of that gray area, but I'd put that at about 70 to 80.
Okay. So there's still a commission. It's just not fully commission based.
Correct.
Got it.
Because there are so many financial tools and financial products that inherently carry a commission, that being annuities and life insurance, which are very applicable, very appropriate products for certain clients in certain circumstances.
Mm-hmm.
I'm gonna build on an analogy for all that a little bit later, but for people that are truly fee-based, these are like your registered investment advisors and fee-only planners. And they kind of think of themselves as being in this sort of upper echelon. And I don't knock them for that.
Sure.
They can make a good argument for sort of being in this upper crust of the financial services industry. I'd say they only make up 10 to 20%. It's quickly become something that did not exist at all to this sort of coveted model of being able to advertise and market to clients saying, we are fee only. You have zero possibility of there being a conflict of interest because you are paying a fee that is to do nothing except us act in your best interest. And even those products that did carry a commission, we're going to convert those into a transparent fee so that there's no possibility you could possibly be duped or pushed into something that might pose a
And you're
conflict.
saying that's like 10, 15% of the business that's doing.
If I
something
had to
along those
guess, I have
lines, yeah.
absolutely
Right.
zero
No, of
data
course.
to
I mean,
back up
just
what I'm
based on
saying.
your experiences, I would envision
just
you
observation.
you qualify to answer that question more than the average Joe. But yeah, let me ask this. So do you feel like I would envision most clients are unaware of the way you're compensated. But after having the conversations, do you run into issues where clients, if given the choice, would prefer to be charged one way or another?
That is a really good question because I don't think I'm going to have a firm answer one way or the other. So to give you an answer on it, I think it kind of boils down to one word, which is trust.
Okay.
I think above all else, meaning beyond a preference of commission versus fee, when it's all said and done, I think the client just simply wants to know or at least believe with a strong conviction that you are acting on their best interest, that you are
Sure.
acting as a true advocate. Very often when I'm doing a financial plan for someone, we get to that part where there is a product that carries a commission, like an annuity product. And I tell them that. And we don't necessarily disclose what the commission is, but there's enough products available and they know that I'm shopping the marketplace the way that anybody in sort of a broker type capacity does, that at that point, they've paid me a fee to do the financial plan. I've learned a lot about them. We've had a lot of conversations. We've gone in depth and intimately into a lot of different subject areas. And so by the time that we actually get to that point in time where there is maybe a commissionable product solution, I don't find that there's any more pushback than there would be when we're talking about the very transparent fee-based accounts. Now, that's just my own experience. I'm sure you have a percentage of people that have it in their head. I want to work with a fee-based only planner. Uh, Specifically, that sort of demographic of people that are overly analytical. I say overly, but very, very analytical, and they're really crunching the numbers. I just don't find that's a large percentage of people.
Okay. And then even the number crunchers, I mean, where do you think that comes from?
The number crunchers as a sort of demographic?
Well, no. So I guess maybe I should ask the question completely. So the first thing you mentioned in your response was trust,
Mm-hmm.
right? But then we kind of ended up with, we typically don't feel that. We see, somebody who's really pushing back hard unless they're super analytical.
Right.
Is it because they're super analytical, or is it because they don't trust you?
Ooh, I like this. Okay, so the first thing that went through my head was maybe we have a way, depending on the type of personality that someone has, maybe there are just simply different ways of earning that trust. Meaning you could sit down with somebody and you might earn their trust by doing nothing more than going to that more emotional, intimate place with them. Whatever journey it is that they want to take you, they want to talk about past traumas, past life events, and you go there with them. And at the end of that conversation, they might trust you a whole lot. Well, you could have that same conversation, and all this obviously is predicated on my own belief, but if you have that conversation with a more analytical type, and that's the way that their mind works, and it's the way they see the world, it's like the matrix that they view everything, they might look at you as you're trying to go down that emotional path and think, this ain't working, buddy. I
Right.
don't care about this. If you want to earn my trust, be transparent about the numbers. Just don't lie to me,
Right.
because everything else is fluff. And that's been one of the more humbling things to reckon with when you meet with so many different kinds of people, is you literally have to cater your communication to who they are. And we all do it on some level.
Sure.
How conscious we are of doing it is a whole different story.
Yeah, I mean, obviously, I run into it in my business, and one of the things we try to do on this podcast, in addition to making it real estate facing and money facing, we make it very entrepreneurial facing, right? Because the majority of the people, in fact, almost all of the people who are on this podcast are, self-employed salespeople, business owners, and whether you know it or not, you eat what you kill, and you're running your own business, and from a sales standpoint, I find myself, every year I have a different mantra, right? And my mantra this year has been basically to identify that most people, especially consumers, are not trying to be malicious, right? They're usually either just ignorant, and I know that's like a bad word, but by definition, it meets exactly what I'm trying to
Sure.
say. That they just don't know any better, or they don't trust you, right? Because, in my earlier sales years, when somebody was really giving me a hard time, I immediately thought, like, this guy's messing with me.
Yeah.
He's just being a dick, right? But as I've gotten older and done more of this, I have identified that they're not being malicious. They really have no idea what they're doing. And going back to this whole analytical thing being trust versus just being analytical, it's something that I think about on a regular basis, because a lot of the clients that I interact with initially, I don't know, right? And so, although there's no doubt that there are individuals out there that are analytical in general, I always wonder, hey, if I knew this guy for 10 years, would he still be like this? Or is it really a trust issue?
Right.
Because we, just like to your point, if you can identify that it's a trust issue, then we can address that, right? Like, let's not move forward until we figure out what is, creating this barrier between you and I as far as trust is concerned. But if they would do the same thing to their mother, which for the record, that they would say they would, but would they? You know what I mean? Then it's just a situation of, maybe just not a good fit.
Yeah,
right?
and I want to expand on that exact demographic that you just
Yeah.
mentioned. So this quote unquote malicious person, which by the way, I've never thought about this type of person using that word, and yet I know exactly
Oh,
what
they're out
type of
there.
person you're talking about. And let me start off by saying this. The clients that I've had the best relationships with over 16 years, this I don't care how this comes across because it's just the truth. They're either people that are very intelligent and really know a good bit. They know a good bit about finance. They understand investment concepts and they make great clients. I can communicate things. They get it. They're on the level. On the other side of that coin, amazing client relationships are people that know absolutely nothing and they concede that they know nothing.
Sure.
This is not my world. This is not my realm. This is why I have you in the first place.
Hmm.
So do your job and tell me what to do. That's why I
Right.
got you. I trust you. It's that group in the middle is the ones that know a little bit or at least think they know a little bit. And then they want to take whatever that limited information, that limited context, whatever those sound bites, nuggets, morsels are that they've absorbed through TV or otherwise, they want to regurgitate that to you as if they're teaching you something.
At 6:30 in the morning.
At 6:29, and
Yeah.
they
Bringing it full circle.
they want to I think it stems from what you just mentioned. It's not necessarily malicious.
Yeah.
I don't take it personal either.
Well, that's what I've learned.
Yeah, but these, like all humans, we're scared of what we don't understand. The unknown is frightening, and thus we tend to act out in situations where we're insecure or we don't feel adequate.
Yeah.
And I think a lot of times that's what it is a potential client that sort of fits this malicious demographic. They've got a bone to pick because they're trying to prove their worth to you.
Yeah.
And you're thinking, you don't need to prove your worth to me. That's why
Yeah.
you got me in the first place.
I'm a smart guy, Jay. You're not going to screw me over.
No, sir, no way.
Right? Like,
No,
what are we
siree.
talking about? But
That's a
yeah,
tough one to overcome. But
it is. It
it's
is.
not impossible, though.
Nope.
And you just provided a path, which is don't take it personal and earn the trust and find the avenue to earn the trust, whether it's letting them vent and slowly trying to reframe how they think about things, which takes a lot of patience and a lot of time. So you may or may not want to go down that journey.
Well, and that brings me to my next question. You just kind of like walked me right into it. I was sitting here thinking about, that's one of my favorite lines in business that we as salespeople, no matter what industry you're in, you have heard probably 100 times. Like, hey, it's nothing personal. It's just business,
Mm-hmm.
right? And it's one of my favorite lines because it's convenient. It's a line I feel like is used as a. I'll just come right out and say it. I fucking hate the line,
It's like
right?
a cop out.
Well, it's a complete cop out, right?
Yeah.
Because at the end of the day, it works both ways, right? So hypothetically, you're running into a situation with the client. They're giving you a very difficult time. They're asking a ton of questions. They're not trusting you. They're doing all this. They're basically creating a lot of work for you.
Mm-hmm.
And while creating a lot of work for you, they're also kind of saying, "Hey, I'm going to be very difficult to work with, and I'm going to ask a lot of questions, and I'm going to make sure that I am paying as little money as possible for the best amount of services. Don't take it personal, Jay. It's just business,
I
right?"
can think of a handful.
No, that's it, but here's the part that I find frustrating is that it's very easy for any salesperson to kind of flip that script. It's like, I can get you signed up, I can do all of the things, and then I can provide really shitty service. I can not answer the phone when, you want me to be available. I can
Mm-hmm.
skip meetings. I can do all of those things. And at the end of the day, when someone's frustrated, I could say, "Hey, man, don't take it personal. It's just business."
Yeah.
Right? But it doesn't work that way. I heard a line the other day. You ever heard the term "the customer is always right"?
Oh, haven't we all?
Do you know the original saying is not, it is "the customer is always right in tastes and fixtures." So some upper level management guy just cut out the second half so that you could just eat a bunch of shit from your client, because
Okay.
the customer's always right in tastes and fixtures. In other words, if you're selling a car and we got a black one, a red one, a white one, and a purple one, if the customer wants the purple one, that's not your problem.
Yeah.
That's a taste, right? If I serve you a dish and you don't enjoy it, it doesn't mean the dish sucks. It means you don't like it.
Well, someone hijacked that saying. didn't
Amen.
they?
So the customer is always right in tastes and fixtures.
Yeah.
Right? Like that to me is like,
Pretty common sense.
can't
like,
even argue
those-
that,
Yeah.
because the
personal
customer
preference.
isn't always right. Like that doesn't give you the ability to just be rude. It doesn't give you the ability to, browbeat people, or, you've seen some of the reviews, or, I mean, we all know the quintessential name Karen. They're out there. They
Mhm.
exist, whether your name's really Karen or not. You know what I mean?
Yeah, it is real, and I do wonder. I want to know who the original Karen is. Like, this has kept me up at night.
I'm pretty sure I know the video. If you look up the original Karen, I think it's the Call 911 Now lady.
Okay.
You know the DJ Skrillex?
Oh yeah.
So, in the one song that became really popular, like right before the like dubstep bass drops, and there's a woman screaming, "Call 911 now."
Yes.
That is a clip from what I think is the original Karen. And so that video, when you watch it, there's like something going on in like a condominium HOA type of thing. And it's like kids playing hockey in the street or something. And someone comes over and says, "Hey, like calm down," and touches her. And she literally screams, "Oh my God, like call 911 now." Like she's being like brutally beaten or something.
I had never even completely absorbed that. I know the song you're talking about now,
Yeah.
that Skrillex song from roughly 2011, 2012, but
Yeah.
I don't think I ever paid attention to the context.
Yeah.
But I'll tell you how I felt old. My fiance, who's only 5-6 years younger than me, didn't know who Skrillex was.
Oh,
When I
wow.
put on an absolute banger the other day. And I remember, that was what the kids were listening to.
I'm trying to
Not
find
that
the
long
clip for
ago.
you right now, because it's
Yeah, I think we need it.
It's something, but yeah. So she yells at skateboarders. Yeah, they're skateboarding, and it's quite a long video. I just really want to pull the call 911 now part, but I don't think I'm going to be able to pull it off. But she's getting pretty crazy.
Take the illegal photographs and insult! Inside voices. Thank you. Yeah, you should. You guys beat on me before.
Karen gets wild.
So that was a Karen. Like, that was
I
actually
think I believe
Karen.
it was the.
What's your name and number, Norma Kane?
I just want to find the call 911 now.
My photographers!
So I don't know,
Oh,
but
man,
yes,
I got to find that one.
yeah, I know.
That's a good late night drifting off to sleep
Yeah.
material right there.
So it's they're out there, man. They're out there, and I think this is it right here. I've got it.
Get off the steps!
If you don't shut up,
I'm calling the police now!
Wow.
Yeah,
Call 911 now!
there it is.
Okay.
Call 911 now.
Yes. There's another
I
sound
think that's
bite
the
in
original
there,
Karen is
but
what I'm getting at. So I think that started in like 2010,
I don't
2011.
see as many of those here in Austin as I did maybe
not in Austin.
back in
no.
Atlanta.
I don't either.
It's a more chill type
But
of
I,
vibe here.
well, yeah. I mean, I think Austin too. You've got a lot of. Yeah, it's chill. I think that's the way to describe it.
How many
It's a
years
little
have you
more
been
laid
here now?
back. 4.5.
That's right.
Yeah, I got here right before COVID, man.
Yep.
It was like I brought COVID to the. It's like I got here December 10th of 19.
Do you feel any guilt for that?
I feel terrible. COVID was my fault. So, but yeah, we made the best of it. Texas was a great place to be during COVID. I feel like, you could have been in California or New York.
Right.
But anyway, after derailing over the Karens and all of that and talking about the trust issues and whatnot, financial planning, I mean, let's get into something that's industry specific as of right now. We've talked a little bit about what it is that you do and the fee-based and the commission-based, but I've had a lot of conversations with financial advisors that have been talking a lot about, we know what the Fed is doing. We know what's going on with, interest rates and all of that. And we had a great opportunity or a great run with bonds, right? Which, I mean, a super safe investment for the most part. Has that window, do you think, opened, closed, or Better yet, you probably can't talk about that, right?
Well, we can definitely talk about it.
We can talk about
And
bonds. Okay.
this is kind of interesting, and we're going to eventually get into an analogy of the financial arena. Really, just when you look at the stock market, maybe over the last 10 years, and all types of investments.
But to be
There's-
clear, you're not giving any financial advice here.
I'd like to go ahead and disclaim that I will not be giving any financial advice, paid for services, fees. But
There we go.
yeah, that was the disclosure that's at the bottom of every email tagline.
Check the link.
I look at a lot of investment cycles in the same way that, like, someone goes out and gets drunk on the weekend, and then eventually that, very fun inebriation turns into a hangover, and
Got to pay the piper.
you got to pay the piper. And the bond market is an amazing example of that, because you had the Fed sort of dropping interest rates dropping and keeping interest rates low over a very long period of time. So let's just use that quick example as someone that starts to drink and eventually gets drunk.
Yeah.
And to stay drunk, they keep drinking.
Right.
And so interest rates being at zero is that person's BAC being at a level where they're happy, comfortable, and to get out of that sort of situation, you got to do one of two things. You either keep drinking or you sober up. And you
So we're
start
talking
to-
like the 3 to 5 beer range here.
We're talking like the 3 to 5 bender,
Oh, wow.
day bender range.
I see.
Because this lasted for so much longer than it should have, and there
Yeah.
were different events that kind of acted as a catalyst. There was the financial crisis of 2008, and COVID came in much later, but interest rates were kept so artificially low for so long that if you were already holding bonds, those actually went up in value, because as interest rates dropped, your existing bonds held more intrinsic value. They carried higher interest rates, especially
Gotcha.
if they had longer durations. But eventually you get to a place where everything being issued is extremely low. Money gets too loose economically. There's too much money floating around. All the stimulus from COVID just exacerbates that. And so eventually these bonds, when interest rates do have to come up, they're going to get dinged.
Yeah.
I mean, they are going to get slammed. And they did. So that was 2021. And that was the hangover. That was, all right, it's time to sober up. This is not going to be fun for a little while. But now I think we've finally gotten to that place that it is become not just safe, but attractive to buy bonds again, because now you can earn that 4 or 5% coupon yield where you can draw a steady rate of return on an asset that still could potentially appreciate, especially if rates even drop a little bit going forward.
I gotcha. So what is the, what else are you seeing in present day market currently that, I guess the question is, what is the question you have been getting a lot lately over, say, the last 3 to 6 months?
Election. And politics is one of these topics that, I mean, it certainly has relevance from an economic standpoint. And you don't want to ignore it as being some sort of factor, especially short term. But I've got clients that only view the world, business, economics through a political lens, and it drives me nuts. Mainly because the data doesn't support it.
Right.
So you could go back as far as you want in American history, and when you try to analyze it, is it better for Democrats versus Republicans, whether it's the president, whether it's Congress, whatever it is, you can look at all the different trends and data points, and you won't find consistency.
Yeah, it's split right down the middle.
Yeah, that if this person gets elected, this is going to happen. There's not a correlation. It's almost as uncorrelated as any investment asset that you could isolate. And thus, you're going to have an election that can make things very interesting, very volatile, very weird in the short term. But if you are a long-term investor, which you ought to be if you're holding stocks in the first place, then it's almost a contradiction. If you're doing this as an investment strategy, meaning some sort of mix of stocks and bonds, which inherently requires a long-term perspective, longer-term thinking than the politics. To get hung up on politics or worried about it is a complete contradiction to what academic data support.
So what's the why behind that? Because I have yet to sit down with a financial advisor that has said anything different about politics than you. In other words, going back and looking at presidencies all the way back 100 years, there is no, what am I trying to say? There's no, there's no repeat, if you will, of Democratic presidencies provide higher gains or Republican presidencies, there's just nothing to prove it. So where does it come from with the client when they sit down and say, hey, I have concerns because it's an election year and there might, we don't know who's going to get elected. Like where does that come from? If financial advisors aren't saying it,
Yep.
who is saying it and why?
Sure. So it actually goes back to one of the things I mentioned, which is an election will absolutely, especially leading up to an election, there is a correlated disruption with markets. And it's this anxiety, it's this unknown that sort of acts as a catalyst in the overall prices of securities, the stock market, just because like any other unknown that you interject into a country's climate that may or may not have intrinsic impact on underlying securities.
But short term.
But short term,
Got it.
absolutely. And so as much as we try to drill this idea of long-term perspective, you're holding stocks is for the long term. Everyone knows this. This is not like some secret. It's almost ingrained in people's heads, and yet our human nature is to always gravitate towards the here and now and the short term. We can't help it. So even when we know this, we know we should all eat well, but the short-term gratification lends us to eating more filthy or more pleasurable.
I love carbs, man.
Who doesn't?
We have bagels in the fridge. I'm literally going to eat one after this.
It
And it's
doesn't-
going to be terrible for me. I can't stop.
No, none of us can stop.
Yeah.
We're cooking a camel's hump tomorrow.
Yeah. Beef hump.
Beef hump.
It's going to be amazing. Yeah.
I just wanted to say camel's hump.
I'd put it out as a little plug for the event we're having tomorrow, but by the time this makes it up, it will already be happening,
Oh, if they weren't interested before,
right?
now that there's beef hump on the menu,
Yeah.
they'll be here in droves.
I am pretty excited about it. But yeah, the election stuff, I mean, I think then if I'm hearing what you're saying, it's important to understand that it is in the short term. It's not in the long term. So as you're sitting down and having conversations with your financial advisor talking about long-term investments, worrying about short-term gains or losses is not really relevant. Is that what I'm hearing you saying?
It is, but I take it a step further with clients.
Okay.
Because I think that's the lazy way to talk about investments with clients is, anytime there's something bad that happens in the market, a lot of advisors, most advisors tell their clients, don't worry, you're in the long term, so you don't have to worry about anything.
Yeah, it's a knee-jerk answer.
But people still feel like they need to be getting advice, right? I mean, that's and I think that is what we're paid for beyond just coaching, if you will. Financial coaching and human behavior conditioning. Yeah, that's part of it. But I take it a step further with my clients, and I try to prepare them. And I emphasize try because you can only lead a horse to water. But I tell clients, the time that we ought to really be sinking some money into the market is when it feels like the world is about to end. I said, when you feel that panic rising up inside of you because you look around and everyone's talking about selling and everyone's talking about being out of the market. And I try to draw a very detailed scenario. I tell them, if you got money stashed away in cash that you've just been waiting to do something with, wait until that panic bubbles up to your Adam's apple. And that is the time that you should probably throw something into the market. And so it's almost a matter of getting people to train their brain about how they think about investing opportunities. So when things get nutty and loopy and crazy, yeah, you got to hold on to your existing investments. It's a long-term game. Stuff's going to happen in the short term that looks amazing. Stuff's going to happen that looks terrible. You're going to average about such and such. But to really enhance that return, I've taken it a step further at this point in my career, and I get very proactive when the markets are ugly. I mean, it's not just a sales tactic. It is, to me, true value driven advice.
Is it like because of risk versus reward? I mean, at the end of the day, when you feel like there's a big risk, there's also a big reward at the end.
I think it's just more of a science. I mean,
Yeah.
at any given time, the stock market's either priced too high, it's priced too low. Most of the time, it's right where it should be.
Sure.
But so it's those big swings when it seems like everybody is all about investing in stocks. It's probably when you should pull back. When it seems like nobody wants to touch it with a 10-foot pole, it's probably when you ought to be dropping some money in. Now that sounds so simple, but from an execution standpoint, it's very difficult.
It's what we talk about in real estate.
Yeah.
And that's the irony, it's like I think that your business and my business are very similar in what I'm about to say,
Very.
where and real estate, the biggest obstacle that we run into is we can spend years honing our craft, learning everything, studying history, doing all of the things. But what seems to drive people as far as whether it's investing in real estate, getting a home loan, it's insane to me that there is a herd mentality that is greater than the advice of someone or even an entire industry that has been doing this for years.
Just think for yourself, bro.
What's that?
Just think for yourself, bro.
Right. Like I've used this analogy like 100 times already on the podcast, and I'll use it again because it's so fitting. I watch a lot of like these animal videos. I love watching like lions just eating gazelles. I'm always rooting for the lions, by the way. Like
Same.
everyone's like, oh, poor baby gazelle. And I'm
No,
like,
I'm with
listen,
you.
if that lion doesn't get that gazelle, it's gonna die.
It's gonna starve.
Like,
man.
do you wanna-
And look
do you-
how many of them there are.
Right. You want to see videos of like starving lion cubs, or do you want to see videos of lions getting gazelles?
Yeah, I'm sorry. I care more about these 4 cute lions than I do the several thousand gazelles that all look the same.
I really don't care about any of them in that aspect. I just feel like
Well,
that's a win.
I get committed.
Right. Yeah. Right. Okay. Good. That's better. I get committed. I'm more interested in like
Been watching them for 15 minutes.
killer
I
whales gotta
care
eat.
now.
Polar bear. Polar bear gotta eat.
Yep.
So I watch these videos all the time, and I always think about, the one that I feel like gets put out a lot because it's really cool footage to watch because of all of the drone stuff, is they show the herd of the water buffalo, right? And here they do these drone videos, and there's it's hundreds of thousands
It's
of buffalo
unfathomable.
that just range for like miles, and they're literally just going this entire distance, and eventually they get to the river where all the crocodiles are.
Yep.
But what's super interesting to me, and I relate this to investing, is like the first water buffalo get there, and there's like really no crocodiles, right?
There's so few crocodiles because I was actually in the Serengeti this past August
Oh,
and got to see the Great Migration happen.
wow.
And you watch on TV and you're like, okay, I think these animals are kind of justified because there's crocs just swimming everywhere. You would not believe how few crocodiles. Like maybe you see one creeping over in some pool that's going to have to do like a 45-minute slow swim just to get even close to the action. But it's just a bunch of animals standing around, and there's like 100 Jeeps. You're all kind of looking down at the river. You're like, what are y'all doing? Like,
Exactly.
just go. You made it. Just
Right.
all you got to do is walk. And then sure enough, you continue because you know what's coming.
Well, I mean, it just reminds me of investing in real estate, or even like you're talking about, where here, you've got an entire herd. They get to the water. There's no crocodiles around. and all they need to do is just cross and be completely safe. But what do?
They just stand
They wait
around
for
and
all their
wait.
friends to show up
Yep.
until one of them, who probably is not qualified to do any of the things that, need to be done there, that just jumps in the water, and they're all like, all right, sweet, I guess now's the best time. But by this time, they've been standing on the edge of the water for like hours, and the Crocs are totally aware. They've already like told their buddies what's going down, and the feeding frenzy begins.
Yeah. Pioneers usually come out on top. But I wonder like how much of an evolutional thing factors into all this.
I think it becomes, we talked about this on one of my podcasts, and I think that there's only one thing better than being, or there's only one thing that, like, how do we say it? There's only one thing better than being right, right? And that's not being wrong. It's the same thing, but at the end of the day, like, the pain that comes from, people always say you need to celebrate your wins, right? And I sometimes don't celebrate my wins as much as I should, and I'll focus on some of my losses. And the losses feel so much more just vibrant than some of the wins, right? And I think that when you are doing something that is taking a risk and other people are doing it as well, well then when the success is there, you're like, oh, okay, that was great. But when the failure is there, if other people are failing around you,
Yeah, no one wants to be alone.
it doesn't feel as bad.
Correct.
So like crossing the river before everybody else and then getting eaten by a crocodile
Like you should have known.
in
dummy.
front of, right, exactly, in front of all of your friends is like the worst possible thing that could happen.
That provides a lot of
I mean, I think
rationale
fear
to
of
me.
loss. I mean, we talk about it in sales.
Yeah.
It's a sales tactic, right? Fear of loss is scary, and and I think apathy, another word that we use a lot on this podcast, plays a big role, right? The whole idea of, well, if I don't, we deal with this in home ownership, right? And my line is, do you know a way to guarantee that you'll never lose money in a casino? Don't play, right? And I think there's a lot of people out there that instead of, you got the guys obviously that are winning. Everybody brags about their wins, and the losers, we kind of poke fun and say like, oh, you idiot, what are you doing in the casino losing all your money? But the true like losers, in my opinion, are the people who are thumbing their noses at everybody, saying, oh, now's not a good time to buy, now's not a good time to invest, now's not a good time for insert potential opportunity in that blank. And then you look at it and we're like, okay, well, what are you doing? And they live in an apartment, or they live with their parents. They work an hourly rate job.
Just whiners.
Well, they're not whining, but like, they have a lot of things to say on what not to do. But no,
Yeah.
I mean, everybody can tell you what not to do. But going back to being advisors here, both of us, it's like, oh, well, I can tell you what you shouldn't be doing, but it's like, okay, well then how do I, it's like, well, just don't do that.
Yeah.
Right.
Just sit around all day, honestly.
Well, and again, it goes back to
Stay
our
safe.
Yeah. And it goes back to our conversation that we had before the podcast. Like, are you qualified to give advice? Right. And it's interesting how much advice is given by people who are unqualified. The number one culprit, in my opinion, that gives horrible, unqualified advice, and you're going to get so much head nodding here, is your parents, right? Like, don't get me wrong, your parents raised you. Obviously, you wouldn't have gotten to this point if they didn't give you some sort of good advice. But, the amount of advice people take from their parents who are totally unqualified to give any sort of advice is just, it's mind-blowing to me. And it's not just about investing, but even just like life advice, like, oh, don't move there, don't do this, don't do that. Like, they're out there.
I feel pretty grateful in that respect, where, I think all parents, part of their job is to drip on you. At
Sure.
least drip their own experience, right? Not necessarily tell you what to do or push you in a direction, but just essentially say, hey, this is what I've learned. This is what worked for me. This is what didn't.
Yeah.
But I'm not telling you what to do.
But I have to
that
stop you there,
balance.
because if somebody is going to give you information based on their experiences,
Mm-hmm.
that's advice.
Well, yeah. I suppose what I mean is the difference between just simply opening up the book. Like here was what worked for me. I'm not saying that it's the same for you, but at least I can share it with you, as opposed to someone saying, I know what's best for you. And
Right.
there's a distinction there.
But the point I'm trying to make is advice would be someone giving you information based on an experience that they've done and experienced themselves,
Mm-hmm.
right? Opinions, my favorite line is always,
Oh, yeah.
I can go online, right? I can do research about hair care products, right? Men's hair care products, I can look into the gel that's associated with it. There's dyes, there's hair loss medications, there's
Mhm.
tons of things that I can look up and become very, very versed in regards to hair care products. But am I really qualified to give a true review on a men's hair gel product right now?
Well, not as much as if you tried all of them.
Right, so I can have opinions.
Yeah.
But can I really give advice? Like, hey, bud, let me introduce you to this awesome hair gel. Let me show you how to use it. Let me explain to you how great it is. Like, that's an opinion,
Mm-hmm.
right? Advice would be me saying, I use it myself. Here's what I do with it, so on and so forth. And I just think that there's a lot of that where if I've invested money, right, with a financial advisor, am I qualified to give financial advice to other people?
Probably not.
Yeah, I can give opinions though.
Mm-hmm.
Right? Like, I can tell you my experiences based on my situation, but like, am I truly qualified to give advice to others? No. And there's just a lot of that. And it's going back to the like buffalo thing, I guarantee that wily motherfucker that's the first to cross the river with the water buffalo,
I saw them. Yeah.
I guarantee that guy in like the social hierarchy is probably not on the top of the food chain. But we all follow him.
Yep.
Deep.
But maybe he is at the top of the food chain.
They were just waiting for him to get there.
Perhaps.
Yeah,
Have to go take another look.
I get it, man. Well, it's all the things that we cover on here. We keep it interesting. So I know we started a little late, but we've already hit our hour.
Wow.
I know, right?
I went
It
by
just flies
fast.
So what I do with everybody who finishes up, now that you're all lubed up, and well, you were a great guest. I mean, some people get really nervous. You did a great job, but I'm going to ask that you look in the camera, give us your quick elevator pitch, and we'll wrap it up.
Quick elevator pitch, Dover Financial Planning. At this point in time, the people that I really want to talk to, connect to, it is those people that are about within 5 years of retirement, and you start asking the big questions. The big ones like, what am I going to do for the rest of my life when I no longer have a steady paycheck coming to the door, or at least one that I've been used to? And that's where I really try to help my clients by taking a holistic look at their entire financial picture, looking under every single rock, looking at every single part of their financial health, and helping them construct a sustainable, successful plan for their retirement.
I love it, man. Thanks for coming on.
Thanks for having
You
me.
got to make this at least a monthly thing, because the one
Loved
thing
it.
we forgot about is I want to talk about the teachers and all that kind of stuff. So we've got.
Oh, yeah.
we-
Just
well, you're
Just getting
You know,
started.
you know where I'm at.
the Financial Trap House.
There it is.
Firm.
All right, man. Appreciate it.